Thank you so much for joining us in the Dwelling Show. I'm your host, Ola Dantes. I've got the amazing, incredible Jason Perro with us today. Hey, Jason, how you doing?
Hey, Ola, I'm doing well. Thanks for having me. I'm glad to be here.
Yeah, so Jason, you have a fascinating story. Every time I see quit his job or quit a job, I'm like, I definitely want to touch on that. But can you just kind of tell our dual listeners a little bit more about who you are and kind of what you've been doing lately?
Yeah. Um, I'm born and raised in Erie, Pennsylvania. Been investing in real estate since 2001. Worked in medical sales while my wife and I built our portfolio from zero to about 300 units. Left my job in 2012, and 2/3 of our portfolio we own ourselves with no partners. And next week we're closing a deal that'll put us over 1,000 units. So 2/3 just ourselves, and about a third of it, we've syndicated. We're GPs in the deal, and yeah, and so we've been doing this thing on our own for the last 8 years. Left the corporate world and never looked back.
Yeah, so that's really interesting because you said you started investing in 2001
Yeah,
and then you quit your job, what, in 2011 or 12?
12. Yeah, yeah, yeah,
So 11 years, right? So that was a big chunk of time.
yeah.
You know, so did you want it to last that long, or you just wanted to be 100% sure before you quit your job? I mean, we'll get back to a little bit more about the
Yeah.
issue, but I just kind of want to touch on that.
Well, when we started out, we were 24 years old, and and what we thought was a lot of money at the time. I said, "Wow, I'm just going to save up a bunch of money. We're going to keep buying rental properties." And our goals changed. What we wanted to make changed. And then I was kind of had the golden handcuffs for a while. So had the day job and was like, uh, you know, um, just hard to leave. I just kept making more money, getting more accolades. And so I wanted to leave. That was the goal. But then I didn't have, you know, all the confidence in myself either. At the time we'd never syndicated anything, didn't really know much about that, just, I had a really demanding day job. So I couldn't even envision, you know, where else I could fit more real estate into my life, be it through flipping or wholesaling or other strategies. We were simply, buy and hold at that time. So it took a while, and I think it's natural. I talk to a lot of people that look to leave their day job, and you have those questions, and it's self-doubt, and everybody kind of comes to the realization sooner that they don't need the job, but that they can just work for themselves and be an entrepreneur. But it took me a lot longer to realize that. But I have zero regrets. I'm glad I spent the time I did with the day job, and never really looked back.
Yeah, it's really interesting because some folks would say, bond the boats and then just kind of go into investing like kind of full term. But it
Yeah.
looks like you kind of did that, but you kind of give yourself a little bit of a wiggle room, which was that kind of 10, 11 year, gap. If you were to go back in time to that 24-year-old Jason, would you have burnt the boats and just kind of went straight in, say like in your first year of investing?
No, I will tell you this. If I did burn the boats, I know what I would have. I know what I would have done. Um, I would have found a private lender or many private lenders, partners, and I would have built my portfolio that way. Because how we did it, we saved up our down payments, we had lines of credit, and so we did the burn method before there was a name for it. With using lines of credit and things like that. But that's how I would have done it. But I think what I learned about the business, having my own skin in the game, making sure that was my own hard-earned money, my wife's hard-earned money, learning a lot of mistakes, but also what we learned in the corporate world, getting promotions, getting better jobs, that was also invaluable. There was a lot of connections I made, just a lot of work and real life experience that I think helped me in running our business now. So, I know some people just said, hey, we'll tell you, hey, just, forget about the day job. You can make a little bit of money in real estate if you're worried about making a little bit of money at a day job. That's true. But, we're all in different phases and have different mindsets. I mean, maybe, there's nothing wrong with having that security of a day job. There's nothing wrong with trying to learn and build your skill set through the vehicle of a day job. I know plenty of people I encounter, good friends as well, that have their coworkers or even superiors at their job who end up investing with them. And so, the workplace can also be a source of private money, can be a source for passive investors. But at the same time, if you really want to experiment with what's going to work for you in the real estate investing world, it gives you that leeway that, look, if you make a mistake, it's not going to disrupt your entire life and send you into the house. You know what I mean? So it doesn't mean that approach is for everybody. I think you really have to find what's comfortable. But if you're not comfortable burning the boats, that's okay. But find what, but don't wait 20 years or 30 years, don't wait forever. But I have a real estate student that I coach that had told me, their goal was to when they retire, to be able to have a bunch of paid for rental property that could be their second career. And that's their goal. There's nothing wrong with that. We don't all have to think, mega abundantly and huge goals. I mean, some people just, they're very happy because they have other things fulfilling their life other than the entrepreneurial journey.
So let's kind of rewind back a little bit historically, right? So you had a day job, in the pharma world. You're a medical sales rep. So life was good, I'm sure. Why real estate? Why did you even bother going into real estate? What was the story behind that?
Yeah. So when I was in college and shortly after, growing up, I never learned about money. And so when I decided what I wanted to do with my life or a career out of college, well, I just wanted to make money. I didn't know what else there was, but I wanted to, be a millionaire. I didn't grow up poor, grew up, like middle class, whatever, but never learned anything. So, you start reading Rich Dad, Poor Dad, you start, encountering people that have money, and all these thoughts and dreams and things are coming into my mind. And I had an internship where I was working for a financial planning firm. And so what I was doing was basically going through all of the client files and setting up appointments for the financial planners with their clients. And I had seen, it just sticks out in my mind. There was like two different, totally opposing types of investors. One was this, joint, dual income, like physician, attorney, married couple that probably made $600,000-700,000 a year, that had a net worth of like a few $100,000. And then there was a couple that was like a school teacher and a secretary who maybe made 75,000-80,000, but had a net worth in the millions. And I'm like, oh my God, how is that even possible? And so I asked the question to one of these planners, and he said, oh, well, they're into real estate. That's really where, like, really wealthy people have most of it in real estate. So I didn't learn much more than that, but that really stuck with me and had this imprint in my brain, like, wow, if I want to make money, I've got to buy real estate. And, fast forward, 6 or 8 months, I got a sales job, had been thinking about real estate, reading all these books. And, this is before, like, just search things on the internet. I mean, the internet existed, but it wasn't like, now we just have Facebook and so many different forums for educating yourself. So I talked to people I knew, and, half the people would say, oh, you never want to get involved in real estate because you're going to have to fix toilets in the middle of the night and blah, blah, blah. But then, the guys that stuck out to me were, there was this, friends of the family. It was two brothers-in-law. One was a school teacher, one was an IRS agent, and they had, 40 units or so. And they seemed to have like a really good life. They take good vacations. They had nice cars. I mean, nothing too fancy, but it was like, wow, this seems like a really cool thing. So I talked to this guy, his name was Rich, and he said, I got a rental property, I'll sell you. And I said, okay, well, let's figure this thing out. And it was like, $32,000 2-unit, 100-year-old building. But it worked. I bought it, and then I realized that, hey, I'm making this cash flow, and this cash flow can pay for, paid for one of my student loans at the time. And I was hooked. I'm like, wow, now I'm going to buy another one and have that pay for something. And so my wife was finishing up her degree at the time. And, we just sold her on that idea that, hey, you know what, we're going to buy real estate, retire early. And didn't really have, this, where we're at right now really wasn't, in our minds at the time.
So there's a lot in there. Just, I mean, so many things like similar to me as well with the first duplex. And that's when I realized, oh my goodness, if I could do this 10 times, I'll be very, very fine. And that was kind of, the inception of our company, Dwell, in terms of,
Yeah.
syndication. And that's exactly what you did. We're going to definitely touch on that. So,
Yeah.
you thought, hey, I can do a bit more of this duplex that you bought from Rich.
Yeah.
So how quickly were you able to scale? Because I think you scaled pretty quickly, right? How quickly were you able to scale from that one duplex into kind of, I think, was it like 40 units before you went into syndication?
Well, that was about it was about 500 units before I got into syndication. But
Oh, wow.
we, yeah, so we didn't start syndicating until about 2 years ago. But kind of the short timeline of that is, we went from that first year in 2000. It was a week before 9/11. We bought our first duplex. The next summer, it was a week before our marriage. We got married. We bought a duplex and a 4 unit from that guy Rich, and then the next year we bought another, and then another, and in 2005, I met a gentleman by the name of Dick, who had 56 apartments. Well, he had more than that, but he had 56 that he was looking to sell. Said, I'll hold the paper if you give me 10% down. And that was, our first $1 million deal. So we borrowed against our 401k savings, took loans and lines of credit to get the down payment to buy these 56 units. So that took us from 23 to 79 units overnight. And then over the next several years, we did a bunch of, Burr model types of deals where 2008 comes and we're buying tons of foreclosures, 2, 3, 4 unit types of things, buying them dirt cheap, fixing them up, refinancing. And every now and then we buy a 20 unit, a 30 unit, we get an owner finance deal with 50 units. And we built that portfolio up to about 300 units when I quit my day job. My wife had already left hers. And then in 2012, so we were at about 300 units. We just kept adding properties, adding pieces to our portfolio. And, and then did a few joint venture types of deals where, maybe it was a 50 unit and I had a friend that would have the money for the down payment, and we would partner where, they would get a return on their money, but I own the deal. They would almost set it up as a loan, and that's probably a whole other show in itself, how we structure those deals. But that kind of whet my appetite for syndication. I knew about syndication. I wasn't entirely sure about it and how I wanted to approach that, and if it was even a fit for me. But about 3 years ago, 2 years ago, I was at a friend's living room for his first mastermind. I became friends with this guy. He has a podcast, and there was about a dozen of us in his living room, and figuring out if we're going to do this mastermind thing. And I was probably the one guy in the room that had never syndicated, and then there was a handful of other people that did. And there was just something that was said that weekend that the light bulb went off, and I said, all right, I figured it out. I know how this makes sense to me now. And then we started syndicating. So we've syndicated a handful of deals in the last 2 years or so.
Oh, wow. Yeah. So that probably took you from, just 500 to, like what you said, if you close a deal, you're going to be around about 1,000, you said?
Yeah. Yep.
So there's another question as well I like to ask. So from the properties you were buying, borrowing, were all those properties self-managed, or did you have a third-party management company?
Yeah, we've self-managed to this day. So early on, my wife and I'd throw the lawnmower in the back of the car, and I'd go mow the lawns on the weekends or at night, and we'd collect the rents and do the leases and did all that for a long time. And then after that first big deal we did in 2005, or was a big deal to me at the time, 56 units, that came with a maintenance guy. It necessitated the need to bring that guy over. And so when we kept buying more property, so then I hired a property manager, and so we have now we have quite a few employees, and we still self-manage. And I like for me, I like that ability to have my finger on the pulse of everything going on, from apartment turnovers to maintenance to rent collections to leasing to all things in between. It's not for everybody, but I think that that we definitely make more money self-managing than we do putting it to a third party. And I don't mean it to knock third party managers, but one of my mentors in the business had said, this is true for like mom and pop types of properties and owners, but they said, no one's ever going to care for your property as much as you do. So no one's going to manage it as well. Then that's not always true. I mean, that's a very broad statement, but that is true. If you're the lead syndicator of a deal, you better care about that way more than than any of your passive investors. Maybe it's your first 2 unit. Well, do you think your landscaper is going to care about that property more than you do? Probably not. And I think that that always stuck with me, that was really important to make sure that I had that proper attention and care to the properties, especially as we started syndicating and using other people's money. And so that's, we're still local. I mean, we're investing into our county, but we're starting to expand into other markets. And as we do, I think it'll still be really important that we have that personal touch on the property. Because you hear a lot of horror stories about third-party management. And there's a lot of people that get it done really well. But I know a lot of very successful syndicators that still struggle with third-party management. And I think that's something that we all have to figure out how to make better if you're not going to self-manage.
Yeah, absolutely. So, I mean, you've got all the stuff going on, and obviously you're looking to, I'm guessing, ramp up as well. What is the future for Para Capital? Are you looking to syndicate more deals? I mean, what are your thoughts in kind of the next 5 to 10 years, especially with everything going on right now with COVID-19? What are your thoughts on the market and how you guys are going to grow?
Sure. I mean, we, as I kind of set my goals out and work on those continually, they always change. And there was a point in time where I thought, I'd never sell anything, but I've started to sell off some of that property that we acquired early on. And I'm going to continue to kind of reset the portfolio, and as we sell off, small pieces, taking that equity and putting that equity into our larger deals. We've the current deal we're closing in about a week. I'm putting money into that deal that I received from selling some smaller properties. And so I like the larger properties. I also like owning things myself. I still love some of the stuff that my wife and I own ourselves, but part of this is trying to create, we have a really good business, but having something that runs really efficiently, like a well-oiled machine, so that if you want to travel and be halfway across the world, you can manage your business from that vantage point and not have to deal with, the minutia of the business. So we're continuing to acquire bigger, sell off the smaller, but also work at paying down. I mean, there's nothing wrong with having, if you had $5 million worth of property with no debt, one could make an argument that, there's a lot of wiggle room and you can make a lot of mistakes and still make a ton of money on having a property like that. So there's that balance of leveraging and growing, but also paying down debt, but being very efficient. We like to travel, like to spend time with family and friends. It's not all about work. I'll be 43 in a couple weeks, and still young, still have a lot of time. So retirement is not totally imminent, but I really enjoy. I've started doing a lot of real estate coaching, run a mastermind of my own, and I enjoy giving back like that. It doesn't seem like at this stage of the game that I want to, trading my time for money for something like that. But I really like to see new investors or even experienced investors kind of get these breakthroughs where, I have a friend we're just coaching him, and he's leaving his day job. And it's so gratifying to get that thank you of, like, even if you just play a small little role in somebody's life on helping them get to their goals. And so it's this balance of, we're acquiring and building wealth, but at some point, I don't need to be the Steve Jobs of real estate, right? I would take care of my family, take care of my friends, take care of my community, give back, lead a fulfilling life. A lot can be taken away from you really quickly. You could, come down with a sudden illness. I had a health scare a few years ago that, it really helped me over time to kind of reset what's important in my life. And I think that, you know, I mean, sure, money's important, you know, I mean, it's great, and achieving and being, you know, a success in business, those things are important to me, but it's not the, you know, but it's not the end goal. You know what I mean? Like being a good husband, a good father, a good friend, a good community member, you know, giving back, whether that's through charity, giving back into the real estate business by helping those that are getting started, or even those that are well established that are looking to grow. So those are the types of things that drive me. And I'm just keeping an open mind to what types of opportunities come about in the future. You know, you had mentioned COVID. You know, it's a weird time out there, but we're closing, you know, we just closed the deal about 2 weeks ago. We have 127 units closing next week. And then I'm closing a small 8 unit in about a month. And, you know, from an agency debt standpoint, it's really tricky right now. I mean, we have to have 18 months of principal, interest, you know, insurance, and what else, taxes and reserves. I mean, that can kill a deal. But, you know, fortunately for our deal, the way we underwrote it and our expectations, it didn't really change anything. So we're feeling really good about how that's going to shape out. And I think a lot of that is like a lot of those restrictions are temporary in nature, and that those restrictions will ease up. You know, there will continue to be opportunity in the multifamily business, especially in, you know, areas like where I'm at in the Midwest, you know, B and C type properties. You know, it's not like, I mean, everybody in this country is affected by COVID. Everybody in this country is affected by the social unrest, but things will change, you know, things will improve, and there will still be opportunity. And so people are affected, but in apartments that are affordable, they're still paying their rents. So our tenants that pay $500 a month in rent, and tenants that pay $1,200 a month in rent, they're still paying their rent, you know, and we're not knee deep in the middle of some project that has to work only if we push the rents, you know, through the roof. So we've always tried to stress test our deals to the effect that worst case scenario should be, it should be a good deal as it exists right now. You know, we shouldn't have to kind of, you know, fit a square peg into a round hole type of thing. So
yeah, makes sense. Absolutely. Well, we're definitely dwelling into the quick rounds. These are going to be quick questions, quick answers. You ready, sir?
yeah.
All right. First question. What makes you unique? What makes Jason unique? What is that differentiating factor that separates you from the next guy or the next girl?
I think, hold on one second. Can you pause for 1 second?
Yeah, sure.
All right. So, yeah, what makes me unique, I would say, is the time I've spent in the business. You know, we're in a tertiary market, and I believe that, you know, I'm not much of a contrarian, but I don't necessarily buy into searching out all of, like, you know, all the new information. You know, there's a lot of OGs in this business that you're not going to find on social media, that you're not going to be out there trying to sell you the brand new techniques. So just stick to the fundamentals. And that's, I think, a little bit different. And I'm learning to find my voice with that a little bit more. I don't want to be that guy that then is selling something or pushing some new technique. I just think that at the end of the day, stick to the fundamentals of the business. And that's what makes me unique.
Yeah, I like that a lot, actually. Yeah. Next question. What was the last book that you read, and what was the one thing you picked up from that book?
So the last book I read was The Universe Has Your Back by Gabrielle Bernstein. And, you know, it's just this amazing book about kind of, you know, like, you know, letting go and you know, just healing your mind and your emotions. And it's just, you know, I love all that kind of frou-frou, like personal development stuff, but I think so much of this is about mindset and having a positive frame of mind, and taking care of yourself. And that's, so yeah, I'm about halfway through that and really enjoying it.
Yeah, I know Gabby. Yeah, she's awesome. Last question. Sorry. You've obviously got a ton going on. You're managing your properties. You're managing investors. You've got a ton. You've got your family, obviously. What do you do for fun?
Yeah. Well, what I would do for fun pre-COVID is we would go to sporting events and concerts, and we love doing things like that. Love to travel. So in a normal world, that's the type of stuff I like to do. Spending time with friends. in our area, things have started to loosen up, restrictions have loosened up. So I golfed for the first time in 3 years the other day with some friends. And it wasn't about the golf; it was about spending time with friends. And so that's really the thing that we like to just spend time socializing. Work, spending time with family, spending time with friends, and that's really fulfilling. Just building those relationships, and for fun, I'm planning my next trip. So during COVID, we can't go anywhere, but trying to plan what we'll do once we can kind of get back to normal.
Yeah. So kind of just tell us how folks can get connected with you, especially with your mentoring program. You can kind of mention that as well.
Sure. If anybody wants to hop on a free strategy call with me, they can go on calendly.com/Jason Pero and book a 15-20 minute call with me. I have nothing to sell. I mean, if they want to partner up in some way or just even talk through a scenario they're working on, glad for people to reach out that way. They can reach me on my email, jasonpero@yahoo.com. Those are probably the two quickest ways to connect with me, and link up with me on Facebook or LinkedIn as well.
Jason, thank you so much. Really appreciate it.
Thank you. It was great talking with you.